Hello traders, welcome back to the Forex Geek channel, and in this video we're just going to be talking about how to grow a small Forex account. Okay, now basically growing a small Forex account is not about speed. All right, it is about structure. Many traders born through small accounts trying to trade like they are funded or overcapitalized. So this video lays out a clear and repeatable strategy for staying consistent and protecting your capital while slowly building it. Before we proceed into more details, let us talk about why most traders fail. Most traders fail with small accounts for the same three reasons. One is over leveraging, which is risking 10%, 20%, even 50% on one trade. Wow. Another reason is no plan. You are just hopping into random setups, chasing price up and down. And then another reason is emotional trading, when you're trying to flip the account quickly. The solution is not in trading more, it is in trading less but better. All right. Now, you need to observe selective trading. Okay, you need to observe selective trading when you're trying to build a small account. You need to pick one or two setups. For example, you can decide to pick a break and retest near key levels. Now let us just look at something real quick. Okay, on a higher time frame, you can decide to mark out key levels of support and resistance on the higher time frame. Areas where you had at least two touches and rejection, right? When you mark out areas of support and resistance on the higher time frame, this could be one of the strategies that you can use. Okay, so when you have a breakout from one of these key levels and a retest, then you enter. This is what we call a break and a retest. You can see a breakout from this zone and it retested the zone and then continued upward, right? So whenever you have a break and a retest, then you look for a good entry opportunity. Perhaps you wait for a candlestick pattern that supports that move to the upside. When you get that good bullish candlestick pattern, okay, for example, you can see in this case, you can see we actually had this uh bullish, it kind of looked like a bullish Marubozu. Yeah, this had it been we had a longer bullish candlestick pattern here, I should have called this a morning star, but still this is a valid bullish candle. You can see it's kind of like a bullish Marubozu, little wicks, tiny wicks on the upside and the downside showing bullish momentum, and this is literally the 4-hour chart. So when you notice a bullish candlestick pattern, within a break and retest structure, in as much as this particular time, it looked as if the price dropped below this zone, but in a previous video I've talked about liquidity, right? So this could just be a liquidity grab, and that's exactly, you can see what happened here. Price grabbed liquidity, or rather the smart money might have grabbed liquidity from here, and then price continued going up. So whenever you have price go below a support level, doesn't necessarily mean that it's a breakout. In fact, that is the reason why it's called support zone, because it's a zone. It's not a particular price point where price must reject. So what are we talking about? When you're trying to grow small accounts, you should pay attention to confirmations. Get enough confirmation. Break and retest is one of the strategies you can use, and then you get confirmation from candlestick patterns. And when you enter your trade, your stop loss should be set below that swing low, and you can target key resistance zones. That is if it's a buy trade, obviously. Key resistance zones for your take profits. Okay, so in this case, you can see that we had a risk to reward of about 1:5.86. So you can see that gradually, if you had entered this trade with 1%, if you are risking 1% in this trade alone, you would have already made about 5.8%. When you risked only 1%, you should be looking for good setups, A plus setups. You don't have to trade every day. You're trying to grow a small account, right? Look for the perfect setups, best setups, okay, and take them. And you can focus on setups with higher risk to reward ratio, meaning setups that you are risking small to make more. All right. Now, you can also consider a strategy whereby you look for liquidity sweeps followed by a structure shift, maybe like a sweep of liquidity, and then maybe you have a change in structure, market structure, and you take advantage of that. Focus only on high quality sessions like the London Open and New York overlap. These windows give you volatility and clean setups without forcing you to watch the charts all day. You don't need 10 trades a day, okay? One clean setup a day or even every other day is enough. You should also set a fixed risk per trade. For small accounts, this could be around 0.5% to 1% maximum. That means if your account is $100, you are using $0.5 or $1 per trade. Now, I understand that in some cases, this can be hard to achieve. So, for that reason, make sure that you are trading only, currency pairs with tight spreads. So focus only on the major currency pairs like the Euro USD, GBP USD, USD JPY, and the rest of them, right? Focus on currency pairs that have tight spreads. And then it might be, if you're using a $100 account, it might be hard to get setups that will be risking only 50 cents. Okay, that's going to be like 5 pips. So for 0.01 lot size, so you might be looking at maybe risking between 1% to maybe 1.5 or 1 to 2%. If you have a $100 account, so probably you can be risking up to 2%. That's understandable because of the nature of the market. It might be hard for you to get a 5 pip stop loss, but if you get a 5 pip stop loss that is realistic, then that's absolutely great. This particular example, we can see that our stop loss is about 7.5 pips. You can see it's about 7.5 pips, right? That's 75.8 points. So in this case, you can see that getting 1% risk would have been, really, really realistic. All right. This is actually 75 pips. This is the 4-hour chart. Sorry, I misinterpreted this. Yeah, I just had to look at it closely again, and I realized that I made a mistake. This is 75.8 pips. Okay, this is 4-hour chart, so it's not possible for it to be 7.5 pips. Okay, but that's by the way. If you're trading a small account, you don't want to do business with higher time frames. Obviously, you don't want to do business with higher time frames. You have to go to smaller time frames so that you can find setups that will give you a smaller risk. Okay, so I will recommend that you use 1 minute and 5 minutes time frames to execute your trades. You can actually do analysis on the 4 hours, for example, but when you want to execute, you have to go down to 1 minute or 5 minutes. You can do analysis maybe on 4 hour, on 1 hour, on 30 minutes, maybe if you are doing a multi-time frame analysis. But when it comes to execution, go down to 1 minute or 5 minutes. In fact, 1 minute. Execute your trade on the 1 minute time frame. So for example, let's say we have a setup around here. This is the 1 minute chart, right? Okay, you can see because you're trying to grow a small account, so you need to trade on the 1 minute time frame. So now this is a bullish trend. Always trade in line with the higher time frame trend. So the higher time frame is also bullish. You can just go to the 4 hours and just look at whether it's bullish or bearish. You can see currently this is a bullish move, right? Go down to the 1 minute and then look for good entry opportunities that will help you to maximize your profit. So now in this case, we're going to be looking for bullish confirmations. Okay, now you can see that we had a bullish confirmation around here. Look at this rejection week and look at this bullish candle. Now, if you enter a trade around here, and then make sure you always have confirmation. Make sure your confirmation is legit, and make sure you are trading in the direction of the trend because you want to catch the impulsive move. So in this case now, our take profits, this is a bullish trend, okay? So for our take profits, this is not good enough. You can decide to exit at this zone. But the reason why I said it's not good enough is because since we are in a bullish trend, the market has an opportunity to go higher. So you can go to maybe the 15 minutes time frame and look for a key resistance on the 15 minutes. Unless if you don't find any. unless you don't find any nearby resistance. Okay, in this case, there was no nearby resistance. Had it been we had a nearby resistance, I would have said we should target that higher resistance. But since we didn't have a nearby resistance, we can just work with this. Okay, you exit your trade, but just make sure that you do not have any risk to reward ratio that is below 1:2. The minimum risk to reward ratio should be 1:2. Okay, so in this case, once you have multiple setups like this, at the end of the day, you'll be building your account gradually. So in this case, you can see we had 5.1 pips. Can you see? It's on lower time frames that you can get such small risk like this. So on the 1 minute time frame, you can see you can actually have 5 pips of risk. So if you are risking 5 pips, that's going to be about 50 cents for a 0.01 lot size. So if you have $100 account, 50 cents is going to be about 0.5%. If you have a $50 account, 50 cents is going to be about 1%. So you're risking about 1% of your account balance if you have a $50 account and you have a $5 pips. Okay. So every day, make sure that you write down what setup you took, whether you followed your plan, how you felt before and after the trade. This habit builds self-awareness and helps you see patterns, both good and bad patterns in your trading behavior. Stick to a simple routine, pre-market analysis, 1 or 2 trades during your session, review and journal, all of that. No need to stay glued to the charts all day. You won't grow a small account by being aggressive. You grow it by staying alive, being consistent, and letting time work in your favor. Small wins stack up. Focus on execution, not outcome. The goal is not to double your account in a week. It is to stay consistent for 6 months so you can either grow it slowly or eventually transition to a funded account. Discipline, not drama, okay? Patience and not pressure. If you are working with a small Forex account, this strategy is your foundation. Focus on risk, structure, and consistency, and you will start seeing progress, not just in your balance, but in your growth as a trader. So if you found this helpful, hit that like button, subscribe to the channel, and comment below with your current account size. Thank you for watching, and I look forward to seeing you in the next video.